Hey, everybody, welcome to another Hot Zone session. Great to see everyone. So, every month I pick out a couple economic events, high impact economic events, otherwise known as hot zones. And we take a look at how the price action is going to affect the S&P, the NASDAQ, the Dow. So, we do a scan of the indices. Of course, remember, if you like to trade futures, this is a time where we have an edge as a futures trader. Micros are viable. Options on the minis, of course, are also viable. And so we focus on some major indices and their reaction to the hot zone. So, of course, we've got the PCE today. And remember, while you're watching this, even if you're not necessarily a day trader, I want to show you how kind of straightforward some of these decisions to day trade, to enter long or short can be. And if you're interested in some of these events from the standpoint of the macroeconomic impact, one of the most important things about the PCE is that when you're looking at the PCE, what you're looking at really is the Federal Reserve's favorite. It's their pet inflation number. It's their pet inflation indicator. This is the one they look at. And that's where it gets kind of exciting. Now, one of the things I'll do likely in today's free video over at the Simple Trading YouTube channel, and most definitely in the premium video, is we'll get into what is happening with inflation. Are we seeing it continuing to go higher? Is it peaking? What's the difference in the read between the PCE and the CPI? Because they are not measuring nor plotting really the same information, even though they're both considered inflation indicators. All right, so we're going to take a quick lap through the indices here, and a couple things that I can see right off the bat based on some basic work that I do before the bell and before the 9:30 bell is, we are continuing to, on the daily time frame, we reverted to the wave. That's the mean that I look at, 34 EMA high-low close. It's by far the most consistently, in a downtrend or uptrend, you're going to find it's the most consistently effective dynamic support and resistance on a chart. So throw it on there. It's an easy one to plot on your chart. We continue to be coming off of that most recent reversion to the mean. You can see there on that middle chart, this little narrow chart here. Of course, the chart to the left is a 5-minute time frame. I'm going to grab my drawing tools here. There we go. And I can point some things out before we get this data. You don't need a lot of time when you have a process that is automated. So that automation is very, very helpful. There's no way that I can do a lot of manual analysis while we're getting volatility. There's no way I'm going to be able to put my orders in, manage risk, using a lot of manual tools. So what we do is we automate a lot of the decisions we're going to make about overbought and oversold, about the underlying market trend, and about the most important thing on this chart when it comes to this hot zone, which is the volatility and time-based support and resistance zones that I created many moons ago, about 12 years ago, in my third book, started introducing the concept of using historical volatility, and that is the hourly price movement range, the red and the green zones on this screen. Probably the second most important thing on this screen is what is the underlying market environment? In other words, what's the trend? Are we up, down, or choppy? We are choppy with clearly bearish bias. We are below what I call the line in the sand. So there's a lot more I would rather do as far as being a short seller, meaning I want to see a resistance level tagged. Could there be a buy? Well, once we get the data here in about 4 minutes, we'll take a look. So again, you don't need about anything more than about 5, maybe 10 minutes if you're new to trading hot zones to determine what your position size should be. If you're a brand new trader and you're going to start day trader and you're going to start trading high impact volatility events, please use micros. Please use micros. And once you get comfortable with micros, then I would make the jump to minis. Minis are very, very much, they are a higher risk tool, gang. I know the initial margin requirement is quite low, but they are still, I believe, tools that are not necessarily the mini, not the micro. The mini is not necessarily something that I would recommend to new or to small account traders. Micros, yes, to both. So keep in mind where you are within your learning curve and make sure you're trading the contract that's going to allow you to control risk, right? Everything has to be, how am I going to control risk? You'll see right now, we're just trading in the middle of this zone. There's my resistance. There's my support. And you'll see here, the clearer trends that preceded the chop we have now was down. So there's obviously more of a path of least resistance to the downside. So in an ideal world, we shoot up here, we get our fill, and we take advantage of scaling out just in front of 11.5. And then if the market continues to go, just in front of 11.40, 440. So I already know what it is I want to do. Gang, you're a major league batter. If my baseball fans out there, you are waiting. I don't know if you can see that in this shop, but there's a baseball bat that sits on my desk, it used to sit on my desk, sits on my bookshelf now. And it reminds me who I am in the market world, in the sphere of the market. I'm not the market. I'm not a market maker. I'm not trading like a hedge fund. None of those things. Know who you are and then trade accordingly. I'm a self-directed retail trader. That's who I am, and I have been for my whole career, and I am proud of it. I trade my money. I risk my own money, right? So when I'm thinking about anything, I'm thinking about risk first. I'm thinking about profit second. I'm thinking about zones that I feel that I have a better shot at trading. And then I'm thinking about predicting the market, zero, right? It's process, it's reaction, it's not prediction. What does predicting mean? Predicting is someone who's going to buy or short right now. We don't do that. Let the volatility, it's going to come out any moment now. Let the volatility happen first. And just like a batter at the plate, here you are waiting for that pitch, whether or not it's in your zone above the plate, that's what we do. So we're pre-identifying what our zones are going to ideally be. Here's the other thing too. What if we don't reach the zone? No trade. Be comfortable with long is a position, short is a position, flat is a position. So when I do these sessions, I remember this. Either we're going to put some great trades on together because the pitch is over the plate where we want it to be, or I get a trade and it's a winner, cool, or I get a trade and it's a loser. Either way, you win. I may not win, but either way, you win because you get to watch either the process, and here it is going higher. You get to either watch the process. So we're looking for this zone in here, right? I've got an idea where my stop is going to be. So I wait for it to get to this area. I'd like to see this area here reached as well. So let's see what happens. And I expect a big candle. Now notice I have yet to even go head on over to an economic calendar to see what the number is. That's secondary. That's secondary. Remember, if the markets are moving higher, that means that likely the data is within what was expected. There's not a surprise here. So I am going to take a quick peek as we wait. So my first limit order to short has been hit. My first limit order to short has been hit. It's a smaller aggro-based position. So I scale in that zone. So my first entry to short the ES has been hit. Next one will be sitting at 37.87. The last one will be at 37.90. PCE numbers. Survey says 0.3. Cooling. What does that mean? There are 3 columns in play right now for target rate probabilities to where the Federal Reserve is going to stop hiking rates. 325 to 350, 350 to 375, and yes, even 375 to 400. The cooler inflation gets, the more likely the 325 to 350 column, 3.25% to 3.5% for the target rate probability is going to be hit. All right, so there is a lot of macro impact, and I will be taking a look at the Fed Fund futures after I put on my day trade. First target is going to be 37.75. 37.75. Okay, NASDAQ. Let's see what we can do with the NAS. This could be MNQ. This could be NQ, right? There's a lot here that we could consider. NAS has hit both the low. I would have loved to have seen this a little bit higher. That's okay. NAS has hit both the low. Look at the fatigue when we hit these zones. That's exactly what this the job of this tool is, to find where we're going to fatigue. Target on NAS is going to be 11,535. When we get up in that red zone, that is you at the plate. That is the ball coming over the plate where you like it to be. That's how much I want that to be an obvious level for me, for us. Not as much volatility as I would have suspected, but we're going to see some buying in this number, because there's a likelihood that the Federal Reserve is going to at least be open to maybe a quarter point less in terms of the hikes, because that's what's expected. And equities will like that. Dow, no trade. No trade on the Dow. Russell, I really don't trade that much, because a Russell is not a measurement of the equity markets in the way and weighting of the S&P, NASDAQ, and Dow. It's its own thing. The composition of the Russell is its own thing. And the sector weighting, the stocks within them, they move oftentimes very differently than the stocks within the NASDAQ, S&P, and Dow. All right, so I'm just waiting for this to sink just a little bit more. Okay, and I kind of call myself the world's most boring day trader. I'm proud of that. And let's do this. And we will make some decisions on the fly, but always based on levels. 37.77.5. 37.77.5 is an optional target. I would like to see 37.75, but 77.75 or even 77.50 is perfectly fine. This dotted line right here is the lowest amount of volatility that we could see for this hour based on historical calculations. I don't mean the last 14 or 15 candles. I don't mean the last 21 candles. I don't mean the last 6 or 7 candles. Remember, average true range is a very different thing than price movement range, for those of you that are wondering. What I'm measuring is historical volatility. So we have an optional target and only an aggro position on the S&P. And by the way, I've got these same charts across 9 monitors here at my desk. So I'm able to look at a couple of the things. And I've got only an aggro and moderate sized position in the NQ. So my only positions right now are short, aggro only in the S&P with a 37.77.75 optional target or 37.75 first target. So what's the job of the optional? So a lot of times I have new traders who are in an event like this, and it can be a little sweaty palm. It could be a little nervous. So what I like to do is give them an opportunity to scale out and move to break even a little sooner, right? Get as much as we can, our capital out of harm's way. That's the job of an optional target. So in the case of the NAS, that level would be 53.5. And then my preference for the first target still going to be around, I like that 530 area, but 535 is what we talked about as well. So I'm still waiting for the pullback to go about half the distance. That's about what I'm looking for. So you'll notice how important these levels are to what I'm doing. And then I will also do the same thing on the ES. You can see what I like to do. The best, now some of this is going to be something to think about when you're trading a hot zone. The best reactions to fading the movement, because that's what we're doing. The market shot up into resistance. Think about what you can't do. What I can't do is buy, right? Yesterday, we had a number of day trades in the Sector Secrets Master. I think we had 2 or 3 day trades. We faded these zones. It was actually a great day trading day. And fading these zones after the bell when you don't have hot zones like a PCE is definitely what I recommend for new day traders. But what I like to do here is stress test my process, stress test my tools in front of everybody and let you all see how I'm making decisions. There's nothing really to do. What I will say is I will not add any more. I will not increase my position size anymore. What I have is what I have, and I'm done. Why is that? Psychology has sort of an impact time. In other words, we want to see pretty sharp reactions when it comes to these hot zones, whether it's non-farm payroll, which I've done here on a hot zone session, which is also CPI, which you've all seen me do. The more the market lingers, the less likely we have a sharp type of reaction. All right, the less likely we have a sharp reaction. Let me also mention the timing on orders. This zone has been sitting in this area since just after 8. So when folks say, well, Rog, how do you know where to place your limit orders? I've got a big zone sitting here, and it's been sitting stably since just after 8. So I've known for the better part of about 25 minutes exactly where my aggro, moderate, and conservative levels are. So there's no guesswork as the data is coming out. Those zones are sitting there. And as I mentioned before, I'd rather take advantage of the short. Now, the data, this PCE data, in reality is kind of bullish. Inflation's not as hot as expected. So when you look at those inflation numbers, I'll usually head on over to Forex Factory. They're not awesome. So you might say, why isn't the market just moving higher? Well, the previous number was 0.3. It was expected to be 0.4, so it held at 0.3. So the initial reaction of the yay is the reaction of, well, we expected 0.4, got 0.3. That's where we got our fill. The truth of the matter is, this is the same number as we saw the last time. The last PCE printed at 0.3%. This time the PCE pointed at 0.3. So it's a flat number, which in many ways is actually pretty good in terms of what the Federal Reserve can lean on to then organize their messaging and justify what they're going to do with rates. It's just they're still going to hike them. They're clearly still going to hike them. We just might not see as many hikes. That will be an interesting and I think important macroeconomic rate of change study to do, which is my longer term self, right? Okay, so what have we seen so far? Decisions can be made really far in advance. We know what the zone is. Either the market heads into our zone or it doesn't. Again, imagine being a batter at the plate. Either we look at we're heads up, waiting for this pitch. We know it's coming. And by the way, if you don't know these events, head on over to forexfactory.com and take a look at the list of hot zones that we have, throughout the week. So we're heads up, waiting for the pitch to come to us. And then if it's over our zone, and when I say zone, I am being quite literal. I'm being quite literal, right? Imagine, I know I'm drawing the plate upside down, but that's the point, right? Aggro position in this area. Is it coming over a point at the plate that I am interested in? Same thing goes for the bottom, right? Same thing goes for this area. So think about I know I'll leave the baseball analogies alone, but they're such great analogies. So that is what we're looking for. That is the opportunity we're looking for. We've tagged 37.75. I can officially call this a winning trade, right? Notice the zones were there well in advance. This is the benefit of having the HPMRs right on your screen. I'm not having to crunch any data. So optional is hit and the initial target 37.75 is hit. We move our stops to break even. And now let me see what's happening with the NQ. All right. NQ has not gotten down there yet, has it? It's touched it, right? Has it touched it? I don't see my order going off. Gang, this kind of day trading is so boring and so slow that I place limit orders on my phone. So a lot of times y'all see me looking up at my monitors, but you'll see me looking at my phone. And the reason for that is I will put those limit orders right on my phone oftentimes. So the NAS is being a little less cooperative. This is how I will manage this. It's already 8:41 a.m. Eastern. Let's move to a break-even stop. That's it. So I've got one winner And actually in this case, my moderate fill is actually mildly profitable. So I can go ahead and take that one off if I'd like, but I can put a break-even stop, which would essentially be 11,567 on the remainder of the NASDAQ. It may not be a winner. It's certainly not going to be a loser, right? We're not going to gap through that level at this point. So let's put a break-even stop at the NAS, and now let's see what happens. Okay, the break-even stop's actually a small winner for the moderate position, but remember, I'm thinking about my most vulnerable position, which is my agro. We based a break even on that. And that is in 12 minutes how I go and take 10 points out of the S&P. That is now confirmed in my account, break even stop. So I'm emphasizing risk, gang. This is a risky time in the morning to trade, right? And now to control risk on the NAS, which look at this, that's achingly close. That's just irritating. That is irritating. Where did I put my order? I think I put my order at 534 and a half. We hit 535 and a half, but it's not over yet. It's not over yet. I just want to put the break even stop with this candle. So as long as this candle does not go through, say 11,567, 11,568, whatever your break even is, I still have a shot of maybe this heading down to 11,534 and a half. In fact, if you want to, because the bidders came in at 1135 and a half, and we know that now, put your first target there. But please put in your break even, and you can move that first target to 11,535 and a half. So I'm still managing this with the optimism of I could still see a winner here. But the S&P is already in the books. Okay, break even stop, scaled out. That is how you trade a hot zone. Now, if we can do this with high impact events, when the bell rings, it's actually a little bit easier. Things are not necessarily as wild as they can be in this kind of hot zone environment. So, like I said, I like to stress test the process, stress test the tools in front of you all to show you, look, this is about process. It's not about prediction. I didn't guess that we were going to take a short. I waited for the market to throw the ball, the pitch, and I waited to see if it was over my plate. The plates are red and green on this screen. We had determined before we even took a trade, hey, let's go ahead and focus on the short side. That would be preferable. And that's exactly what we had. So I'm really happy with that ES winner. I'll take 10 points in 12 minutes. Absolutely. And I would just like to see this NQ cooperate. And if it doesn't, we've already told NQ, you are not getting any of my money. In fact, I'm still going to take some of yours. Moderate was hit. Agro was hit. And I've got to break even at the agro level. So agro will be a wash. Yeah, I pay commission, but the moderate will more than make up for that. And it would be then net a winner. Not too bad. All right, gang. So that is how we do these hot zones. I hope this was helpful. And I will see you all for charts and coffee in about 15 minutes. And as far as, HPMRs are working very nicely. Yes, David. Look, David, I created these a long time ago because I got my hands on historical volatility, blew my mind, and it's evolved now into a really great tool. NASDAQ, break even out. No harm, no foul. Moderate's actually a winner, but I'm going to call it a break even. Done. So a small winner on the NAS from the agro break even, moderate, small winner. ES was a winner. I'm done. Notice how when we didn't get that snap back, I started to go into a little bit more of a protective mode. So that's a really important thing to do. What time do I place my limit orders? Paul, I'll usually do it 2 or 3 minutes before the event, or I might do it as we're getting the movement. This one was a pretty slow hot zone. All right. So my pleasure, Kim. We'll schedule a couple of these every month so we can, do a little trading here at the Simple Trading YouTube channel. I can showcase what I'm doing. And if you haven't already, it's not too late to join me. If you liked this, if you thought, Ron, this is kind of interesting. Tomorrow is day 1 of our, and here it is. You can go get it at simpletrading.com/guide. Do I have the link? There it is. So we already had the class. So tomorrow, Friday at 9:20, we're gonna do a whole 2 hours of this. So the first day of live trading is tomorrow. You can still join us, get the class, watch it at your leisure, watch it at your pace, and then join us for live trading tomorrow. All right. So that is that. I'll see you all for charts and coffee at the top of the hour. Hopefully this was helpful. If you're catching this on replay, leave your questions, leave your comments in the section below. And I appreciate that smashed like button. All right. I know now when you click on the YouTube button, I know on my phone, it throws confetti. It's actually pretty cool. All right, gang, be good to each other. I'll see you soon.